nie, as hy rooi gaan bo. Links bo, as hy rooi gaan.
Yes, guys, we're back. We're back. I don't know if it's going to be one session for you, but this is my second day in the recording studio at Sunnyside, Pretoria, that we're going to do deceased estates. Again, I'm just going to reiterate what I said yesterday, that there's another clip where we are doing only the wills. Now, obviously, when you go and listen to the wills, then obviously you have to incorporate that into the session because it's one and the same thing. And if you don't know the legislation pertaining to the drafting of wills and the law applicable to wills and all of those things, then it's going to be problematic in terms of understanding what you should do in the deceased estate itself. For an example, this morning I had 2 instructions on deceased estates where I have to put up 2 legal opinions. And one of them is half of the heirs wants to declare the will invalid, and the others not. So I have to apply my mind to those things. Interesting point this morning is when I wrote back to the attorneys of record that's appointing me on this, where is your mandate? They did not have mandates, and that's a no-no. I want to make this very clear, that if you're appointed as an agent to do a deceased estate, administration, winding up, make certain that that executor mandates you correctly. And then further, if you are the attorney or whoever, advocate, that is appointed as the executor, then obviously the law will be followed in terms of your executorship, which to a certain degree is limited, but it's actually very wide. Executor has a lot of power as long as he acts legally and he acts with the necessary bona fides. So that's good. That's one thing this morning. That is that came in over my table. I saw that I can relate to you on a practical foundation, because you are the future, and tomorrow these instructions will come over your table and you will be giving them out to counsel or dealing with them yourself. Just give me 1 second. I just want to talk to my IT quickly. Justin, come here. I just want you to lift my chair. I've got my chin here, and I know that some people, they don't like that. Can you just lift my chair a little bit? We'll be back with you. All right. We're just going to see what we can do here. That's better, Justin. Okay, great. There we are. I think that's better. That's better for the recording. Okay, guys. Now, yesterday we went through some of the theory, ideation, repudiation, and all of those things, and we explained a few of the theory. And then swam bam back, we landed in liquidation and distribution account. The one thing in this subject that usually gets people down and gets people negative, and remember what I said yesterday. If you can secure tussen 10 to 15 marks only on the heading of a liquidation distribution account and a certificate at the end, and that's usually the marks needed to pass an exam if you have mucked up totally the content of the liquidation and distribution account. So there's something I want to say now, and it's imperative going into the exam. When you do your liquidation account, remember you have your heading, and then you have your liquidation account. Do you remember yesterday? I'm now saying yesterday for you. You're going to listen to these recordings in one shot. So don't mind when I go there. What I mean is in my first recording, and I don't know if they're going to link these recordings together. I'm not sure. But under liquidation account, remember what we said. It's the movables and the immovables. And a lot of things goes in there. And I made a few points there. I'm not going to make them again. But remember, when you get to the gross value at the end of that specific account, because that's where everybody makes the mistake. If that amount is wrong, if the gross value amount is wrong on your liquidation account, then your calculations down the line is going to be wrong. For example, if you calculate your executor's fee, the first one, not a 6%, the first one of 3.5%, then obviously that's going to throw you out. And this is why it's very important. Maybe I should repeat this. Remember what I said now for me yesterday, for you now, if you're looking at all at the same time. When I sell something during the winding up, what amount goes into the liquidation account? That sell price, the money I brought into the estate. If I don't sell anything, or I transfer it later out to an heir, or whatever the situation is, it was not sold, then the valuation done goes into the estate account. So don't get tricked by that, because that's where the people most of the time get tricked in the exam. And then the gross value at the end of that, which you have to transfer it over and you work with it until the end. Remember, you still have to do the 20% estate duty calculation at the end and all of that. And that's wrong. And I've seen also that sometimes that amount up to the end influence dutiable taxing, right? Because you have your rebate of 3.5 million rand. And if you make a mistake in the gross value amount and that throws you under the 3.5 rebate, there's no tax applicable and things like that. So if you get it wrong, you actually lose those marks in the minis. Then we spoke about something. Let me go back there. I've now forgotten. Listen at my English. Let's just page back. I just want to look at something. Because we call that, when you work in your liquidation account and you put in your movables, yesterday we taught you to stay just and short in brackets. Under that, what you're going to do with the asset. You're going to sell it, or somebody going to inherit, is somebody going to inherit half a share of it, or whatever the situation is. Please always do it. They either give half a mark for that or a full mark. And in any event, if I mark and my marking instructions give me a discretionary right, and I see you've got 48, usually I work from 48 to 49.5% failure. If you achieve 48% to 49% and I have a discretionary right, that's been given to me. If it's not been given to me, I don't have it. Sometimes it's been given to us, and then I can always go back and see what you did in your liquidation distribution account if I want to see if I can get you to that 50% mark. That's me. So it's important there, right? So please just have a look at those things, guys. All right. All right. Okay, yesterday we did the heading and we did the liquidation account. Today we are moving on to liabilities. Rewind a little bit, or if it's in one clip, good for you, but I don't think you're going to sit there for 4 to 5 hours, and I do not recommend it. Take this an hour and a half, an hour for an hour, and come back and whatever the situation is. Listen it over and over. Remember, you're a distant learner. You must do the research yourself. It's very difficult for us if we're not in a classroom, obviously, notice boards and all of those things to assist you. And this is being done by this department, Mr. Malema and his crew, Dorcas and them, for your convenience. You'll get a few on these, I presume, on subjects, and they are there to help you at all times. Never approach these people on a negative foundation. They're there to help you. And if you are decent with them and you ask honest questions, and they will always assist you, but the moment you get rude or you're unpleasant, then obviously you sour that relationship. These people work very hard to make distance learning working, specifically in the times we are living in pertaining to COVID and so on. So please, guys, these are the people that's there for you, that's going to take you into the future. If you pass what you are doing there, they are there to take you into your career, into the future. And they know what they're doing. And they've made so many changes under COVID-19. So please, I appeal to you. Help them to help you. Isn't that correct? Right. Enough of that. Let's get down to it. Now, when I use the word liabilities, then obviously a liability is something that, for example, we're going to have to look at that paying, and we're going to have to give money out, and we are liable to somebody else. All right. So let's quickly, there on page 120 of your guide, let's have a look at it. Liabilities can be grouped together under 3 basic headings. Your administration expenses, claims against the estate. Against, remember what we did yesterday? In favor, yeah, we're happy. Against, well, we're going to have to give out. And then, of course, estate duty. And estate duty, you can only escape if you fall under the curve of that rebate. All right, so we'll get to that. Don't you worry about that. I'm trying to do that as easy as possible online, although this is not a thing that you can really do online, but I'm giving it my best shot. Right, so here's administration expenses, claims against the estate, and your estate duty, and usually that's going to be your liability. So first of all, what you're going to do is let's look at what is administration expenses. Administration expenses are incurred by the executor administering the estate. they are incurred after the date of death. They are an exception to the rule that expenditure incurred after date of death must be reflected in the income and expenditure account. So take note of that, underline that, because that's the differentiation between the administration of expenses, little division, and then that division there, what do they call it? The income and expenditure account, which is a division on its own. So there's a difference. And you need to know what a difference is so that you can put things in the right places, if not for anything else, so that your maths work out and your taxable calculations work out and all of those things. This is very important. They include advertising costs. There you go. Bank charges, security bond, executors' fees, and master's fees. Now, please have a look at your master's fees. A lot of people, when I do venue presentations with people sitting in front of you, they don't know that the highest fee for a master nowadays is 7,000 Rand, but it depends on the threshold of the value of the estate. And if I'm not mistaken, it starts running for 600 Rand, but it is in your guide here. You can go and look at that. So then, of course, your executors' fees, we said yes, the 3.5 on the gross value of the estate, but then again, 6% after date of death, what you bring in. Anything you bring in, maybe you win a court case or you invest money while you're busy with this thing and it accrues interest. Everything you bring in runs at 6%, and I found a lot of people don't know about the 6%. And they're doing the work, but they're not getting paid for that. Valuation costs, cost of realizing estate, cost of transfer, bond cancellation cost, cost of preserving assets. Please have a look at preserving assets. We spoke yesterday about immovable property. You don't have money to pay a security company, and they're plundering the building there in mid-city Johannesburg or Cape Town or Port Elizabeth, Bloemfontein, or whatever the situation might be. The master also permits post and petties limited to 260 Rand, and that was still the case in 2016. So remember, you got to do your research. Go and see if it's still the case like that. Just always make certain. So these are your administration expenses. And now that I'm talking about it, you're not just reading it there where you're sitting alone doing your self-study. Now that I'm reading it, it's like, oh, yeah, okay, now we understand it. We get it. Now, if somebody's saying it, I'm hearing it. Okay, that makes sense. Now we move on. Let's look at a few of them and have a discussion about a few of them. First of all, your master's fee. Master's got to get paid, right? This master fee is calculated on the gross value of the estate assets as it appears in the liquidation account. Now, do you realize what I'm saying? I'm saying that if that gross value under your liquidation account where your immovables and your movables goes in, if you make a mistake, then obviously you're going to calculate this wrong. Now, this is where it all goes wrong. Now, that's why your gross value, your total gross value after your liquidation account must be 100% right. And that's also why you have an interim liquidation and distribution account, because later it can become a final one. It can change. It can change. The master can chase it back up and down, amend it, final. You remember what we said now yesterday, although it might not be for you yesterday, so just permit me to say that. So no master's fees payable in 18-free administration. Now, this is very important. I've seen fraud here. People say, no, nobody has nothing, and they're actually lying through the teeth. It is not an 18-free, and they push it in because they have to pay those fees. Don't get involved in that. Hey, guys, never be like this. A friend or a client walks into your office, you're an attorney advocate or a trust-bearing advocate. You are a legal practitioner, and that's where we're going. I just amended your letters, and we're moving to legal practitioner. And then under that, you can either be an attorney, trust-bearing advocate, or advocate. Never be like this. Somebody walks into your office and they're friends, and you, don't worry, I'll deal with this. Don't you worry, I'll get it under 18-free or what. Don't be like that. You are a professional, you have integrity, and you believe in professional ethics. And that is what's important. Don't do that. Just don't do that. Just don't do it. Just follow the book and do it right. Because if you are caught, it's egg on your face. And believe me, that embarrassment is not good at all. All right, when we talk about 18-free in terms of Schedule 2, the master's fees payable on an estate with a gross value of 250,000 Rand or more reflected in the liquidation account. And the 250,000 Rand is actually then, of course, that curve there in terms of whether it's 18-free or not. And if you go down a little bit on page 120, last paragraph there, where the gross value is 250,000 Rand, but less than 400,000 Rand, the amount payable is 600 Rand. And that was the situation in 2018 still. So if you're under 400,000 Rand, then you don't pay more than 600 Rand on master's fees. And that's important that you know it, right? Okay. If gross, and then of course they talk about if the gross value is 400,000 Rand or more, for each completed 100,000 rand by which the gross value exceeds 400 rand, a further 200 rand is payable. So you have to do column calculations. That's the best way. If you're not a mathematician and you have a problem, just put it in columns. And just up with 200 rand, right, it goes up on this side. Easiest thing under the sun. But remember, I have told you now that a maximum is 7,000 rand. According to me, it cannot go over that. And there they give you a formula. They show you how to do these things in your own time. Work through it. If I can give you a bit of advice, all the calculations in this guide. You take a pencil and you take your calculator. Remember what I said yesterday. Use one calculator. If you're going to start using different calculators, and one is an advanced calculator and one is a normal calculator, and you use them both in one liquidation distribution account, you're going to muck yourself up with calculations, but because they don't give the same answers, especially when it runs into decimals. So we cannot do that now. So what you do here with your pencil is you change the numbers here. So, all right, gross value is there, 3.050 million. You make it 4 million. Put zeros in there. And you calculate and you practice. This is how you do it. You do it in pencil, you do it here on the side in your book so that you have it, and when you prepare for your exam, you can just throw a quick eye over it. The master's fee is calculated on page 121, is reflected as an administration expense and is paid to the Department of Justice and Constitutional Development, and there's a specific way of paying these things. Make certain that you do it right, and I'm not going to go further into that. You can have a look at that yourself, and then you'll see the abbreviations there. The Master of Bishu is MOHBHI, and let's look at the more familiar one. Johannesburg is MOHJHB, and they give you the codes there. So it's important that you have these codes. Let me just put this away, put that there. So now we have control. Right, so have a look at those abbreviations, because that is how you identify also where you are in terms of your deceased estate, amongst other things. And then I talked there about the master's fees further. Bear in mind that where spouses on page 122, bear in mind that where spouses are married in community of property, the master's fee and executor's fees assessed and calculated on the gross value of the asset of the joint estate. Now remember, this differs from what we said yesterday. We spoke to you yesterday in terms of the calculations of the estate duty. You say, hey, whoa, we can just pay duty on the half here and there, and we explain that to you. But please mark that. This is very important, because you pay it on the gross value of the joint estate. So that's something totally different. Executor's remuneration. Now, this is where you get happy. This is where you become happy. Let's have a look at that. The executor's remuneration, because that's you. You're getting paid for your work done here. The executor's remuneration may be dependent by the will, but where the will is silent, the tariff will apply. Master may, if there's special reasons for doing so, reduce or increase any remuneration. And just be careful for a short question here, whether the master can do it or not. Most of you will say, no, he can't, because the law says it's 3.5. No, he can reduce it. And the second thing is, in the will, you guys could appoint executor, say, well, you know, me and executor agreed to 2.2%. And if the executor later will say, no, but it isn't like that, I don't want to do it anymore, you cannot force executor to be executor. So they can walk away. Section 51(3)(a) refers to an increase or reduction of any such remuneration, and it therefore appears that a master has jurisdiction to increase the fee even where it is fixed by a will. And that will be an application, it will be a discussion, it will not just happen. There's going to have to be a reason for that. And they show you the maximum executive fee according to legislation is 3.5%. And if they decide it's got to be 2%, they can indeed do that. All right. Let's have a look at what on page 123, what Regulation 8 is saying. Regulation 8 provides for the following remuneration, 3.5%, and there's your 6%. I'm not going to talk about it for a simple reason, and I've spoken about it in the first part of this presentation so many times. So you can go through all of that. There they talk about the reduction again in the Colley versus the Masters case. I'm not going to go through that. That's just going to waste our time. We have spoken about that. Moving on to page 124, still part of the administration expenses, estate advertisements. So this is how you do it. As I'm talking, you can even make notes. So this goes there and there, but it's all in your guide. There are 2 statutory notices which must be advertised by the executor in a local newspaper and the government gazette. The cost involved in publicizing these notices are administration expenses. The section 29 advertisement must be published in a government gazette and a local newspaper. Underline that. Underline that. The master's going to throw you back. Master's going to throw you back if you don't do that. I think somebody just came in. I think, oh, they're going to fetch me a bottle of water. This is the second clip. You'll see in the first clip, I'm also asking for a bottle. The second notice must be published by the executor in the government gazette. So there you have that, and a local newspaper. And then, of course, I want to take you to the bottom of page 124. The charge for the government gazette as in December 2020 was still 37 Rand and 82. Now, I remember I've got sinus, we're all human. And I'm not going to stand up and stop this just for a little bit of sinus. Come on, not going to happen. Just a little bit of sinus. I don't know where it's coming from. I think everybody's going to run away from me. Yeah, sinus, they don't know what it is. In any event, please, one of the reasons that the liquidation and a distribution account also doesn't work out is people cite these costs wrong. I've seen it a million times in the exam or even when they do assignments. So please make certain you always research the costs. Now in your local newspapers that might differ. I see actually I've seen there is some amount that's actually been used by all of them, and that is 376 and 5 cents. So just have a look on page 125 and stick with that. But for any reason, if the local newspaper charges you something else, then obviously that's going to go in there. I don't think they will, but if they do, then obviously. But please get a government gazette tariffs right. It seems that actually it was still the case in 2020, and it seems to me it has run from 2016, and it hasn't changed. So that's advertisement costs. Get it right. Goes into your administration expenses. These things are very, very easy. Very, very easy. Now, I want to talk about something else, because yesterday we touched on columns, and I said never less than 2. But I actually prefer 3. I'm not a clever guy, so I want to have everything away from each other. What you also do with the administration expenses, you can run it in a column, give it a heading, transfer it over to the second column, and then take it into account into the final column, if you still want to do that. If you're in 2 columns, it will just run down and be transferred over in terms of whether you want to minus or what you want to do with it. So remember, in terms of columns, because you have all these ad hoc calculations you have to do on a sideways, it's always better to have more columns than less. Bank charges, there you are. The bank charges reflected here are those levied, and this is page 125. Estate banking account, the executor must open an estate banking account in terms of section 28, except, that's right, if it's an 18-free one, under 250,000 Rand. There you go. All bank charges may be deducted as an administration expense. I'm not going to talk about this further. You can go and read through it, and that is just the way it is. And there you have a little example. Please look at these examples, stick with these examples, and you will be fine. And you can also see the itemized numbers, the parentheses. Do you remember the first clip? The parentheses, the item numbers of your entries in brackets. You'll see here they're doing it 16, 17, 18. And then later on, in later calculations and later divisions, they start, you go and extract them. And you can even say item 18 plus item 45 divided by item 19, whatever the situation is. That's how that works. Right. Still with administration expenses. Still very easy. It's no biggie. Just follow the general rules. Transfer cost and transfer duty. What's that? What are we doing here? That's right. It's an immovable property. So it's going to get transferred to somebody. So 10 to 1, it's not going to get sold. It's not going to get sold. This farm, it's just not going to get sold. We're going to transfer it out. But the conveyors need to be paid. And maybe you have paid, well, you are going to pay the agent that has done the valuation on the property. The only asset which the executor is obliged to master in the name of to transfer into the name of beneficiary's immovable property. It's only one. It is important to note that the cost of conveying assets from their location at date of death to the location of beneficiary is for the beneficiary's account, unless the will provides to the contrary. Underline that. If the will provides to the contrary, obviously the will pay it, but in this case it's for the beneficiary's account. Which also means that if the beneficiary is inheriting maybe other stuff, are you listening to what I'm saying? Maybe he's inheriting the cash in a check account or 20% of the residue, you can make a deal. You can make a deal. You can make a set-off as an executor, but all the heirs, listen to me, all the heirs must just agree and say, so out of his account now, he's going to pay for this transfer, but he's going to inherit 100,000 Rand. This transfer cost is going to be 25,000. Make a deal, but get everybody to sign off on it. You are the executor. You're entitled to do it. A lot of people will tell you otherwise. That's a lie. Get the heirs' permission, and then you can just deduct it and do your mathematics there and run with that. All right, so that's important there. That's an easy way of doing it. Delivery may be tendered at a place where the assets is located, so that's registration, and that's about it. And they talk a lot about that. If you go to page 126 at the bottom, if the immovable property is sold, that the purchaser usually pays the transfer cost and transfer duty. There they say it again. It is usual for the seller at his cost to obtain an electrical compliance certificate, electrical offence certificate, which is a legal requirement, and the provision of these costs may also be reflected as a liability in the liquidation account. All right, so there you have it. You can make deals around that. And also remember, there's a lot of certificates when you transfer a movable property, and gas certificates also, but they're not all applicable depending on what province you are. Right, there they have electrical compliance certificate example for you. And I see that on page 127, there I have a transfer fee for you. That is almost nothing. Top of page 127, they give you an example. And I want you to go and look at that, and then I give you more examples going down. Another administration expense, which I've had a lot of questions also on, is funeral expenses. Let's have a look at it. Funeral expenses are reflected as a creditor's claim, not an administration fee. For estate duty calculations, these costs are limited to what a commissioner considers reasonable in terms of that specific situation. So it's a creditor's claim, but still, they say it's not an administration fee. But I've seen so many people actually put in there. So make up your mind about that. This is what a guide is saying, but it's a kind of administration's expense. But let's follow the rules. Put it there with the creditors. It's not the end of the world. Previously, the matter did not allow the cost of a tombstone against the estate unless provision has been made for it in this will. However, in the light of the amendment of 4A, which allows the reasonable cost of a tombstone as a deduction of the estate duty purposes. All right, so rather go creditor because it's for the purpose of the estate duty process, and then make a note that, and people are going to ask you this, make a note that you cannot pay for the tombstone. It's not just the funeral expenses excluding the tombstone. The law has changed, and you can do that now. And then they give you, of course, there an example on page 128. There is your funeral expense, and they've also independently included the tombstone expense, and I agree with that. Valuation expenses, assets which are not realized, sold in the course of the administration must be valued. Why do you value things? Because you must remember you cannot impact negatively on the estate and the heirs. So as an executor, you have a responsibility to get the best possible value out of everything you can get to benefit the estate in terms of the heirs, the legatees, the heirs, all of those things. In estates where there are minor beneficiaries, remember we said it in the first clip too, or estate duty is payable, it is usual for a formal valuation to be attended to by the appraiser appointed by the Minister of Justice in terms of section so and so. The appraiser is entitled to remuneration as per the tariff set out the Regulation 9 of the Estate Act, and this is the due of minors, not your normal valuation there. This is the due of minors. We said it in the first clip. If a minor, you've got to do these valuations. And then, of course, the valuators there, they are clipped in terms of the fee they can charge for those valuations. Give me a second, please. All right. So I'm just being a human being again. All right, so they give you examples there, valuation costs, admin, and they say admin there. So when I say there's an admin expense, and if you go back, where's that one we had here? If you go back to the transfer fees, you also see they say admin there, they say admin there, and actually when you go to the bond costs, they say creditor there, but we'll look at that further on. So please remember where you have to place these expenses. Again, it's all in your guide. It's all in your guide. So valuation expenses there, never forget that with minors is obligation, and there is a capped fee there that must be paid, and there they give you the example for it. Cost of realization. What is realization? Realization is basically we're going to turn something into money. End of the story. We're going to turn something into money. Where property estate has been sold, the cost realizing the asset is administration's expense, auctioneer's fees, estate agent's fee, or stroke stockbroker's fee. So that's something that you must just remember. And then, of course, you'll put it under administration expense, and we're happy with that. The cost of realization, there you have it. I say again, it's administration's expense. And what they are doing there is they're showing you precisely where it should go. All right, guys, going on to page 129, moving down there to the section 31 deals with the late claims. Let's have a look at that. So there's your administration expenses. Let's quickly look at late claims. Now, remember, we did an advertisement in the first clip. Do you remember? And that advertisement said this person is dead, and they called in for creditors, right? So usually you have a document, you fill in, submit your claim, and if the executor is satisfied it's not bogus, then he'll pay out. There won't be a hassle. Maybe he'll try and negotiate a settlement. So that can happen there. And then when the 30 days are over, actually, you know, then the late claims. You remember I said that that's your defense if a late claim comes in. And sometimes a late claim, if you remember what I said in the first clip, comes in so late that you can actually not redeem it anymore. And then your defense is, well, that advertisement was in a newspaper. Well, you didn't see it, but we follow the law. Let's see what happens here. Section 31. If any person fails to lodge his claim against the deceased estate before the expiry of the period specified, remember the 30 days, in respect of that estate, he shall, if he lodges the claim thereafter and does not satisfy the master that he has a reasonable excuse for a delay, be liable for any cost payable out of the estate in connection with the reframing of any account or otherwise as a result of the delay. Wow. Whether or not he lodges his claim thereafter, not be entitled in respect of his claim to demand restitution from any other claimant of any monies paid to such other claimant at any time and before he lodges his claim, as the case might be in pursuance of a valid claim against the estate. And then obviously in section 33, you'll deal with the rejected claims. So that is what happens when it's a late claim. And it's got to satisfy the master. So because it's a late claim, it's going to go there. And the idea is actually not to indulge it. I mean, the advertisement was posted, you had to do it in time. Not our fault you didn't see it. When you didn't hear from this person, should have inquired what's going on, found out he was diseased or whatever the situation is. But remember one thing, it has to be cut off somewhere. Somewhere it has to stop. So he's going to have to look at this section, and within that section, he's going to satisfy the master. And it's not always that easy because there's things you have to reverse that maybe you cannot reverse anymore. There's things you've got to undo, you cannot undo anymore. Rejected claims in terms of section 33, notification that a claim is rejected by the executor shall be in writing addressed to the claimant and sent by registered post, in which notification the reasons for the rejections are set out. I want you to mark this, very important, because you can land up in court. And what happens when you land up in court? You make guys like me happy, because you're going to pay me a lot of money to defend this person that says, well, you know, I put up a claim and never heard from you. And now it's winded up, and why did I never hear from you? And now you have to defend. So I'm going to make money. I'm going to make money out of somebody. You personally, if you acted negligently, or maybe it's not winded up, but the 30 days are gone and you haven't given the reasons in due time. There's so many things that can go wrong. And then you're going to appoint legal representation. And what's the problem with that? Why am I getting happy? Because I'm going to get paid and the estate's going to suffer. So please don't be negligent under section 33. If you are not going to accept the claim, it happens a lot. It happens a lot. If you're not going to accept the claim, you're going to reject it. Follow this rule to the letter. This is fantastic ground for litigation and professional negligence if you don't do it. Now, there's another case from the heirs that you were personally negligent. You don't want that. Now let's look at the diverse claims. Year one has to deal with the normal claims against an estate by creditors. For example, the balance outstanding on a mortgage bond, the balance owing on an overdraft facility, outstanding amounts on clothing accounts, chemist accounts, very normal stuff. The voucher in support of these claims will be a certificate of balance in the case of amounts owing to banks or financial institutions and a statement of account in the case of open accounts such as the chemists. The voucher must reflect the capital balance together with accrued interest to the date of death. You're going to split it, eh? The executor must also call for copies of previous and current statements to reconcile the account and substantiate the balance owing. So it's not just a question if they sent you this certificate. All right, he owes us this, and now it's accrued this interest. Normally you'll write the interest off. That's a settlement. Negotiation on a settlement. You can do that can ask them, okay, well, I'll pay, but take the interest away, whatever the situation might be. But you have to investigate on previous statements if there isn't any inflated amount suddenly out of the blue here, or error in calculi. Error in calculi. Go read up on that. Error in calculi. So you must look at that accounts and make certain that there is no mistakes there. Now, Air finds out about this, even if after it's been winded up, and he challenges you on account that you didn't make certain that indeed the balance owing in these normal accounts were indeed correct. You've got to do a little bit of footwork, but that is what you're getting paid for, and that's how it should be done. And then, of course, there is a good example of that, and that's great. Now, at this stage, I want to talk to you about your examples. And what I want to say to you is what you should do is from I started at a heading, you must actually have executive pad on the side. Or you can type it on another laptop if you're that lucky, or you can split your screens if you can do that. And I want you to actually, as we're going through this and you are listening to this clip over and over, start typing or writing out this liquidation distribution account running, not with the commentary in it. So that when you get to the end, when I'm finished, because you can see it runs 25, 26, 27, 28, 29, 20, 30 in your parentheses. That is your item listing within your brackets. So what I want you to do is I want you to write it out so you get a practice. You get a practice, start knowing what's going on. And then for your final learning curve, that is so important, you see in one example, the final product of this example in terms of the liquidation distribution account. And the heading, just put your own information in there. But that's what I want you to do. It's very important. It's very important you do, and you take this advice I'm giving you. You write it out, and you make it once so you can look at it. All right. Maintenance claims in respect of miners. Yes. Very important. These claims always come in if provision has not been made for it in the will itself. And if you come to me, I usually make certain we address this. And we say a lot. I mean, I don't think my testaments are under 17, 18 pages. I mean, you go to the CNA or you go to Solomon, those people get a 2-page will. Through the years, I've developed a unique testament. You won't find it anywhere else in the country. And they run up to 17, sometimes 30 pages. A lot of people say, but that's a lot. And I say, well, you know what? We're giving the executor everything to fast as possible wind up this deceased estate, and we make certain we address everything. So that is important. That's the way I do it. All the court cases I've done and all the testaments I've drafted in the past, I've built something that works for me, and I know that. And some of my clients have died, and I've seen now how effective these wills are when it comes to administering the deceased estate. There is no second guessing. Everybody knows where everything is, and I even include the policies in the will where the beneficiary is not a deceased estate. I do that too, because I want the executors to know where everything is. And in any event, what did we say in the first clip? That although it's that in the final calculation of estate duty tax, those amounts that has been paid out to private people, other beneficiaries, has to be taken into consideration. A lot of people don't know it. A lot of people don't know that. All right, minors, always claims for minors. If there's no testament, for example, then obviously. Both parents have a duty to maintain the children. End of the story, right? This duty does not cease upon death. Interesting, eh? Going to the grave, but you've got to look after your kids if they're minors. It will appear that a claim for future maintenance against the estate of the deceased parent can only be justified if the surviving parent is unable to support the children by his or her own means. I want you to take note of this. If provision has not been made in the will, then of course this is going to apply. And even if provision has been made in a will, come on, let's talk about it, and the provision is not enough, then this is going to apply. And it's about availability of resources. First question is, can people contribute? Can this estate contribute? And the surviving spouse, are they needing? And if they are needing, how much are they needing? It's not just a carte blanche opening because there's minor children. There's a lot of aspects that has to be considered. And when people become ridiculous, especially we see that in divorce cases. Yeah, we're getting divorced. I want 50,000 Rand maintenance a month for every child. It's ridiculous. What are you going to do with 50,000 Rand for every child? So I've seen judges in Pretoria High Court literally chase advocates out of court and say, go stand in the lobby and sort this nonsense out before you come back in my court. Stuff like that. Now, especially in the times we are living in, everybody's got it hard. Yesterday we were rich, today we're poor. That's the way it's going. So this is important to look at, and it's going to be then, this is the criteria on which it's going to be done. And if you're the executor, you have to address this. You have to address this. And when it comes over your table, you can't be a smart ass about it. You've got to sit down and talk to these people and say, all right, let's entertain this before we go into civil litigation, right? I'm not going to pay a guy like me. It's madness. It's madness. Sometimes, some cases I walk out there, I make more money on the cost order than my client is getting out on the case. Maybe we partially won. Things like that. A claim for future maintenance may only be determined after all the amounts due to the minor child from the estate has been factored into the calculation. These amounts include benefits from the will. I'm paging from there to here. That's why it's going like that. Insurance policies, pension payments, and third-party claims. Maintenance is dependent upon two variables, namely need and ability. There you have it, needing. The duty of support is generally upon both parents. And there they have an example. They give you a good example there. I feel the need to quickly read it. A and B are married, and I only have today in this studio hour and a half over, so I must pick up the speed here. A and B are married and have one child, C, a minor. A and B get divorced. A marries D. A and D have two children, E and F. This is what happens. When A dies, he only benefits D and E, and F. B may lodge a claim for future maintenance against the estate of A on behalf of the minor child C. And this is usually what happens, because now there's tensions, and usually the new wife doesn't want to have anything to do with that wife and that children. It's bad stuff. It happens. It happens. It must be noted that the claim for future maintenance cannot compete with the claim of the deceased creditors. Underline. Underline. We said it yesterday. You're going to pay the creditors first. You're going to settle the credit first. We said it yesterday for me, and the first clip for you, that even if you have to realize liabilities to get money and to pay the creditors, then you've got to sell houses and cars before anybody's going to get benefited. And here you see it. Even a maintenance claim will stand after the creditors. You know, I don't like saying this, but it's a fact of law. You might actually see it coming your way that, and I've had some of these things. I never had a court case, but some of these set of facts for legal opinions has come over my table in the years, that the person becomes very sick, is very rich, and suddenly becomes a squanderer. Now you can bring in a squander, you can bring an application against a squanderer. You know that, right? Can stop him, take control of his assets, but not always. One of the things is maybe he doesn't squander, but he just makes debt, buy houses on credit and cars on credit. And when he dies, he is actually impacted seriously negatively on a situation like this. Despite that, maintenance will stand behind the creditors, bottom line. And it's not only the maintenance of minors, right? It's also of spouses, where there's no provision made for spouses, or for some reason, spouse, due to affairs and things like that, has been maliciously, well, if she had an affair, I suppose it's not that malicious, but has been disinherited, but they stayed married. Okay, so those are the things we are thinking about. And, you know, at my age, being in the practice for so many years, the set of facts has come over my table so many times. Right, that's that there. Then I talk about the guardian. You can go and look at that in your own time. Going to the contingent claim, you can... They refer you there to reading work and research you have to do. Remember, you're a distance learner. You're not sitting in the classes, the night schools and the day school. You're a distance learner. A lot of obligation on you to listen to me. So I don't understand that. Before I pose a question, let's see if I can research it. Okay, no, I'm still not satisfied. Let's pose a question, because I am going to come back and answer questions. Right, maintenance claim with respect to surviving spouse. We just spoke about it. Terms of common law, there is no obligation of the deceased to maintain the spouse after death. After various attempts to secure a legitimate portion for the surviving spouse after the death of the deceased, the Maintenance Act was promulgated into effect and so on. You've got a court case there. In terms of the maintenance of surviving spouse on page 132 Act, the surviving spouse has a claim for future maintenance, and that's where I'm going to stop. You can work through it, because now you get different marriages, Hindu marriages, Muslim marriages, indigenous marriages, and all of those things. You also get cohabitation. I've had many of those cases where they live together for so many years, and then what happens? What happens? I mean, she's maintained him, looked after him when he was sick. He died, and suddenly he dies, and the children says, "You're not getting a cent." many of those cases in my career too. So bottom line is, she has a claim. Just go and look what I'm saying there, and then run with that. All right, the next one on page 133 is marriage claims. Let's have a look at that. One must distinguish whether the spouse were married in community of property or out of community of property, and where the accrual applies. Spoke a lot about that in the first clip, touched on that. But let's just, for convenience sake, see what I'm saying here. Where the spouses were married in community of property, underline, the survivor automatically has a claim for half the joint estate in terms of the matrimonial property regime. Strictly speaking, this claim for half of the community estate should be reflected in the account as a claim against the estate in terms of the regulation. However, the practice is evolved to reflect this claim for half of the estate in the distribution account. And we're going to talk about the distribution account. Don't have a fright, underline it. We're not there yet. We're coming to it. It's later on. Another division there. Lift my hands. Can you see it now? That's coming later on. A very important division. Most people find this to be the easiest method, since the liabilities are also the liabilities of the joint estate. And I agree with that. The claim for estates, half is then based on what remains after the liabilities, excluding the funeral expenses and estate duty have been met. Why excluding the funeral expenses? It was not an administration expense, but a what? It was a creditor, viewed as a creditor. Remember there, the tombstone too. All right, so that's why. This is normally reflected as follows in the distribution account. In the distribution account, may also bring the account to the funeral expense and estate duty, which are not community expenses, but expenses only of the deceased. And I'm going to stop there. There you can see it. There's the example, and I take you through it. Now, still on page 134, after the example, where the spouse is married out of community of community with the inclusion. Now, you better put the circle around inclusion, because later on it's not included, of the accrual system. The survivor may have a claim against the deceased in terms of, because it's included. The accrual is included. It's part and parcel of the anti-nuptial contract, and therefore there could be a claim there. In terms of this section, the spouse who shows the smaller accrual at the dissolution of the marriage has a claim against the other spouse for half the difference between the respective accruals of their estates. And I had to teach a lot of people to make those calculations. People struggle with those calculations. But if you've done it a few times and somebody helps you, it's not too bad. So just going to have a look at that. Then on page 135, normally the accrual will be calculated in a separate schedule in an account, with all the amount being reflected in the liquidation account. All right, underline that. You can read the rest of it as long as you know where it's going. Because at the end of the day, when we mark liquidation distribution accounts, obviously we mark correct calculations. And if you put it somewhere else, a specific department of calculation within your liquidation and distribution account, that amount's going to be wrong. Sometimes the whole thing is wrong, but you have included everything, but not in the right places. By some miracle, you come to the end of your liquidation distribution account, everything works out. That happens too, but you still lose those marks, because strictly speaking, it's not where it's supposed to be. Now, I tell you one thing, it's challenging marking liquidation distribution account if you have a positive attitude towards marking. And that's something I always do. Always try to find that extra mark for you. But sometimes we just can't. It's just impossible. All right. The following assets are not taken into account determining the accrual. So this is important. I have to read this for you. Inheritance, legacy, or donation. I think you all know that one. A donation between spouses. Yeah, I think you all know that one too. Any damages recovered other than damages for patrimonial loss. Yeah, that's an important one. Civil litigation, defamation. Unlawful arrest, unlawful, and then the SAPS had to pay you 40, 50, 85,000 rand. One of them, we won one 2 years ago. I won the last one day, but I still did those things. Any assets excluded from the accrual system under the anti-nuptial contract? Go read your anti-nuptial. Guys, you've got to read the anti-nuptial contract. This is another thing I have found. I get phoned, I've got to solve this and solve this. Like this morning, I had to write back to an attorney, send me this, send me that. Because where he's sitting, for some reason, he thinks, well, you know, I got this, that's enough. You've got to read the anti-nuptial contract, specifically when it comes to the accrual and what has to be included and excluded. You cannot just attach it and he often goes to the master and you think you've done your work. And the liquidation and distribution account, you've got to deal with the accrual if it's included, all right? If it's excluded, well, that's great. And I give you an example there. It's also important that initial net values of respective spouses' estate should be calculated in accordance with the CPI. And just a while ago, I did those calculations for a client in terms of the CPI, the Consumer Price Index. Go into the internet. I don't think they've got it in here. Doesn't look like it. Go into the internet and just have a look at that and make certain, oh yeah, they got something here, but that is at a time of X deaths, his initial net value will have to be escalated as follows. But go on the internet, I've got good calculations there that you can trust, and you look at them there. Right, going on, income tax and capital gains tax payable by the estate. Everybody runs away when it comes to CGT. I myself own 1, 2, 3, 4 properties. And so capital gains tax, there I go. You know, I don't really have a choice in the matter. So everybody runs away from capital gains tax. Let's have a look at it. The executor is the representative and taxpayer of the deceased. Obviously, you walk into his shoes. Although you are a little bit limited in terms of your powers, you walk into his shoes. It is the duty of the executor to lodge the deceased's final income tax returns to the receiver of revenue in order that the revenue may lodge a claim, if any, for any outstanding tax owed by the estate at date of death. The income tax return is for the tax period of 1 March of the year that a person dies to the date of death. Underline that, because that's how it has to be calculated. The complicated estates which involve a variety of business interests and which are further complicated by calculations, I think complicated is the right word, of the calculation of capital gains tax. It is suggested that executor make use of accountants to complete and lodge the outstanding tax returns, and I totally agree with that. When you have to calculate CGT within your discretion, if there's enough money in the estate, if there's enough money in the estate, you cannot be a spender as an executor. You'll be cautious. And like I've said, always consult your heirs. So listen, I'm just going to appoint an accountant. We don't want my mom to make a mistake with the CGT. Everything you do, consult your heirs. Make them sign off on it. Keep your side clean. And you'll see if you bring in the heirs, sometimes the executor is the heir, one of the heirs or sole heir, then it doesn't present a problem. But you must make certain that whatever you do, there's enough money to do it. And with enough, I don't mean there's enough to the cent, then you cannot do it. You're going to have to try and do this yourself. Otherwise, you can impact negatively on the heirs. So always, whatever you do in your administration to winding up the estate, you must always make certain there's enough money. Otherwise, what do you have to do? You have to realize assets. Start selling assets off so you can do your work and, of course, address your creditors. All right. So yes, on the bottom of page 136, bear in mind the CGT is an additional tax and does not replace estate duty, which is death tax. Although then we just tell you there that years ago it was 25% and estate duty now is 20%. All right, so have a look at that. That's your death tax. What a word for it, eh? The dead pays taxes. All these games, my son is playing Assassin's Creed and Odyssey and Valhalla. Yeah, there's a lot of tax being paid. All right, going on page 137, I still talk about CGT there. And estate duty, I'm not going to do that with you. You can go through it yourself, except when we're on page 137, I want to read the following paragraph here. It's the third paragraph. As CGT only came into operation in 2001, persons who acquired assets prior to this date were allowed a 2-year window in order to value the asset as 1 October 2001. This value then serves as the base cost of such asset, and the capital gain or loss on the property after this date will be subject to capital gains tax. In cases where such an asset has not been valued, say Schedule 8 determines the value to be used as the base cost being either 20% of the value upon disposal, or a value determined by the use of a time apportionment base cost. Oh, accountant, help us. As set out in paragraph 30 of that very Schedule 8. A problem that may be experienced by executors that it may be difficult to determine the base value of the property if there are no records available in the deceased person estate. CGT becomes payable when a taxpayer disposes of the property, which disposal could take various forms, but it's usually the sale of a property. All right, so I just wanted to read that to you. Look at that 20%, and accountant, chartered accountant, get them on board. It goes on page 138. It actually teaches a lot there. I want you to just go through it at the bottom of page 138. 40% of the capital gain on property is included as part of the taxable income of the specific individual, tax then being payable at a marginal rate applicable to such a person. For example, if a capital gain on property is 1 million rand, then 40%, obviously 400,000 rand, would be included in a taxable income of such person. However, there is an annual exclusion of 40,000 rand applicable in the case of natural persons. Underline that. Natural persons. Therefore, instead of the 400,000 rand being included as part of the taxable income, it will be 360,000 rand. However, in the case of death, the exclusion is increased to 3,000 rand. Using the example, the amount that would be included in such a person's taxable income would therefore be 60,000 rand. Accountant, chartered accountant. And if you don't understand this, by the way, guys, I know this is fast, robust. We are teaching you fast. We're giving you electronic teaching because of COVID and all those things. Because down in NISA, you can't sit in halls and you can't accommodate so many people in halls. But with experience, you pick up these things. And later on, we attend seminars where guys like me talk about it, and we're on the clipboard, and you've got the workbook in front of you, and we don't move on until all 60 or 100 people in front of understand what it's all about. You gain experience, and it just becomes better and better for you. So don't be overwhelmed by this, except that you get it in the exam, of course. So you must do your research and all of those. On page 159, we deal in the case of deceased estates. It's important to take note of the following important exclusions. This means that these assets are not subject to CGT. It's important that you go through that. I'm just going to read a few. Assets transferred to the surviving spouse of that deceased person, kind of a important one, wouldn't you say? Assets bequeathed to an approved public benefit organization, of course. Long-term insurance policies of the deceased, yes. A deceased person may qualify for relief from CGTP on capital gains acting up to 1.8 million rand in respect of the deemed disposal of small business assets on death, and so it goes on. You can go through that in your own time. So those are the instances where it doesn't apply, and you need to know it, and you need to know those thresholds and those parameters you have to work in. Going on to page 114, estate duty payable by the estate. All right, we're back. Great. Here we are. We are back at a liquidation distribution account. Let's see what's going to happen here. The estate duty calculation is reflected in this sub-account. Although estate duty will be dealt with in more detail below, it must be borne in mind that the estate itself is not necessarily liable for estate duty payable. In terms of section 11 of the Act, certain persons as well as the estate are liable for the payment of this duty in the estate. Only the portion of the estate duty which must be borne by the estate must be reflected in the liquidation account as part of the liabilities. So that's important. Please underline that. It is easy to deduct in a specific cash amount, cash legacy, awarded to the surviving spouse and or above organizations, legatees, in the Republic of South Africa in terms of section so-and-so. Problems arise when there are the beneficiaries or co-beneficiaries of the residue. What is residue? After we residue is usually what's over. The legatees has received all they must receive. So Joe got a car, Tabu got a boat, Cindy got 40,000 rand, and there's still 1 million rand over, combined of cash and assets, furniture, whatever. That's residue. And usually the residue must be divided as indicated by the will. And if it's not indicated, usually the executor will realize it's divided equally. Because at the end of the day, if it's not indicated, what did we say in the first clip? You can have a testament that where the Interstate Succession Act and the testate, where there's no act, where there's no testament, no will, can both be applicable. So that is important there. So that is something you will have to look at. On the one hand, one could determine how much of the cash surplus these residuaries will receive. That's how much to deduct in terms of section so-and-so until the estate duty has been calculated. On the other hand, one could not calculate estate duty until one knew how much to deduct for cash surplus awarded to these residuaries. If estate duty is payable, it should be deducted from the total cash on hand calculated in the recapitalization statement. What is the recapitalization statement? It's another division within the liquidation distribution account that we will look at, and I believe they will have an exercise for you here where they give you an example. So remember, we just had the distribution account, and now we have recapitulation. These are all divisions within the liquidation and distribution account. And now right here is where you get confused. Up to here, it was quite all right. We had the heading, we had the liquidation account, we had the liabilities, and suddenly we're starting to look at as administration expenses. You were kind of all right with that. And then we looked at claims against the estate. We kind of right with it. And suddenly we start talking about the distribution division and the recapitulation division. This is why you have to do your research. You've got to read this guide closely, because this is where it starts getting complicated. But it is dealt with in this guide thoroughly. All right. So I'm not going to stick too long on that. I want to go to page 141. Total and the balance for distribution. So 140, 141. Let me just finish up with that paragraph on 141. See paragraph 3.17 for the calculation of section 4Q, and more specifically the subsection with this paragraph called section 4H and or 4Q, deduction where a public benefit organization or surviving spouse are the beneficiaries or co-beneficiaries of a residual of an estate, and then you'll find it there. All right, but that is estate duty. That is the do's and the don'ts of estate duty, and they give you 2 examples there of how you can do it, and you have to decide which one is the best. That's as easy as that. And practice makes perfect. Right, totals and the balance for distribution. After regulations so-and-so have been complied with, the regulation stipulates that the amounts reflected in the money column must be totaled, and any balance for distribution to be carried forward to the distribution account must be reflected in such a column. And there they give you an example where they run it up to 100,000 Rand. That's your total assets. And then you go down to your liabilities. There is your administration fees, your creditors. What is under creditors? Your tombstone and your funeral expenses. And then your total liabilities, estate duty payable, and they take you through the calculation there. So now you can see why it's important. So remember, your administration fees, there was your administration division. So the totals you bring together, and then at the end of the day, what do we get? Your total liabilities. What is the liabilities of this deceased estate? It comes down to 100,000 Rand. And then they say to you there, master's fees and executive fees calculated on gross value of the estate. But that we've said now in the first clip, this clip, we've already been saying that over and over. Right. Now, we are finished with distribution and all of those things. Well, we're not finished with distribution yet. We're finished with liabilities. Now, I'm going to recap. Right, are you with me? Take a deep breath, because when I went distribution and recapitulation, I lost you. I know it for a fact. Heading, a lot of marks there. Liquidation account. Make certain you know what to do there, because everything, or let me say a lot of things, are calculated on that gross value of those immovable and movable assets. All right. Then we spoke about liabilities, and in liabilities and all of those things, we are dealing with administration costs, claims against the estate, etc., etc. And we saw that tombstones and those things are also done there, but they go on the creditors. All right. And then we calculated the total liabilities at the end of the day. Now we're going to deal with, amongst others, the recapitulation statement and the distribution account. All right. Playback, listen again, playback, listen again. Take a deep breath. I know when I went to recapitulations, distribution were gone, because this is online teaching and you're like, oh, what now? All right. Luckily, your guide is clear, and luckily you're going to be posing questions to me. The cash recapitulation statement, let's have a look at it. There on page 141. In terms of regulation so-and-so, the account must contain a recapitulation statement which calculates if the estate is liquid or illiquid, and if liquid, the other executor intends to make good the shortfall. What did we say? Just remember, we're going to sell assets. We're going to do something. The aim of this sub-account is to reflect the liquidity of the estate at the date of death. If there is a cash shortfall, the executor must record how the shortfall is to be paid. The heirs may wish to retain the assets, and in this event, they will be obliged to contribute the shortfall to ensure the liquidity of the estate. paying in. Now, I know you've heard it a lot at university. Oh, the heirs has to pay in. What does that mean? There it is. If there's a shortfall and you want to sell her assets and the heir says, no, don't sell dad's guns. Don't sell mother's paintings or rings or jewelry. Then they're going to make up that shortfall. Now you understand what it means to pay in. And these things happen also with insolvency, right? And if you go to the Insolvency Act, there's also paying in. You must be very cautious when you initialize a insolvency. You could be paying in. The estate may be solvent but illiquid, and in this sub-account, the executor must record whether there is a surplus shortfall of cash. Yeah, maybe I should just say this. We're talking about cash. There's no cash. He needs cash to do this thing. All right, so things have to be sold. So it's not insolvent. Illiquid means he doesn't have any money. Doesn't have any money to wind this up. All of those there. Cash, and in the event of shortfall, the other shortfall is to be paid. We say that. Right, we're going to move on to 142. You can read through that. They say there, where there is a cash surplus, such cash surplus will be reflected as part of the residual awards in the distribution account, which is going to come later. In terms of this sub-account, the total amount of the cash assets, I'm going to read it slowly. In terms of the sub-account, what sub-account? What sub-account? The recapitulation statement, the recapitulation account. In terms of the sub-account, the total amount of the cash assets, and assets reduced to cash are reflected. This information is obtained from the divestment notes of the assets appearing in the liquidation account. What is a divestment note? I spoke about it in the beginning here. Yesterday we dealt with. That's in the liquidation account. We've got all the, in the liquidation account, we've got all the assets, even movable, and just in brackets below them, you say, well, this person is getting half of that, that's getting half, this is going there, we're selling this. That's a divestment note. And there's marks in divestment notes. So put them in. That's a divestment note of the assets appearing in the liquidation account. This reflects the cash position in the estate from which the estate expenditure must be paid, including your administration fees, creditors, estate duty, and cash bequests. Now, yes, cash bequest, in the will there can be a cash bequest, but normally at the end of a will that's not insolvent and everything has been sold, there will be money, and it has to be divided. Cash bequests. All right. Okay, ladies and gentlemen, you will look there on page 144. There is your cash recapitulation statement. So now, do you now understand why I'm saying start from the heading on the executive pad and write out with your hand how many million times you're going to watch this and work through this guide, this whole liquidation distribution account flowing without a commentary in between. Because if you do that, you are learning the first thing, the allocation of the different kinds of divisions, the allocation of the different kinds of division. Remember, there has to be a recapitulation statement, and you need to put it in the right place. And that's why I'm putting emphasis on chronological flow and order of the liquidation and distribution account. A lot of the experienced people listen to me say, yeah, I don't do it like that. The emphasis is you are experienced. But for the newcomers, this is the way it is. If I can teach you where everything is coming already, then obviously the prospects are much better that you can facilitate the process much easier when you are challenged in an examination. Oh, thank you. McDonald's Coke. Let's have a sip of there because I don't know where the water is, but it hasn't arrived. Okay, that's not Coke. What is that?
Apple juice.
Apple juice. Apple juice. Give me a second. My voice just gets some moist on it. Apple juice. Okay, ladies and gentlemen, I'm back. You think it's Coke and you take a muck and it's apple juice. And that's not the same thing. Look at that cash recapitalization statement. I'll give you two scenarios there. Have a look at that. And know where it comes in the liquidation distribution account, and I can swear my voice has changed to that apple juice. This IT guy is trying to kill me. Please come and help me. In any event, right, there we are. Now, before I go on, heading, liquidation account. What did we say after liquidation account? We went to our liabilities. We had our liquidation account, and then we had our administration cost and claims against And don't forget the claims in favor still there under the liquidation account. We came into the liabilities there. We dealt with administration. We dealt a little bit with creditors, master's fees, and all of those things. And we floated right into this. And we now with the recapitulation statement. All right, the recapitulation statement. And now we're moving on to the distribution statement, the distribution account. Regulation 5.1 includes a sub-account headed distribution account in which we reflect why, to whom, and what. At the bottom of page 142. Why, to whom, and what is to be distributed. All right. So we're now happy. We finished with the recapitulation account. It's a necessity. It has to be in there. You have to make those calculations so that, among other things, we can look at the cash and the assets reduced to cash and look at those items. Do you see there on page 142, item 3, 8, 9, and 10 of the liquidation account? That's the parentheses, the brackets. Now we're pulling it over and we're showing what is happening here to the master. The liabilities per the liquidation account, and there you see it, the administration and the creditors. Oh, and I forgot, there you have it, the estate duties. We see the cash legacies, we see the shortfall if there's one to be paid by the residuary heirs, and in this case, you're going to pay 20,000 Rand. But if you go down to the next example, they gave you 2 examples, which is very nice. You'll see 25,000 Rand. Do you see that in page 142? There is a surplus. Everybody's happy. And I suppose you know you're going to get paid at this stage, at least. Now we go to the distribution account, and it's a why, to whom, and what. All right, why? Let's take it slow. In terms of testate and intestate succession, if any award is made in terms of any conditions in a will, then without regurgitating or summarizing the terms of the condition, what an interesting word to use there, regurgitating. All right, bring some animal genes in here into this sentence. Summarizing the terms of the condition, it must be noted as awarded in terms of and subject to the terms and conditions of the will or terms of the Interstate Succession Act. All right, I've spoken a lot about the Interstate Succession Act. Please write there if you're still confused. Interstate Succession Act means that we don't. Testate means we have a testament. Intestate means we don't have a testament. Am I right? All right. To whom? Beneficiaries, full names, the surnames, and whether they are majors or minors. Minors. Valuations. And the fees are payable and limited by promulgated legislation, regulations, Schedule 8. All right. Majors, valuations, can pay those guys. But minors, don't forget, there's obligation on you to protect them. And that's why. What assets and what amount of cash is to be awarded to each beneficiary? Why, to whom, and what? Firstly, the distribution account must reflect the balance available for distribution, which had been carried over from the liquidation account, being the difference between the assets and the liabilities. All right, so we have now, when you know what a liabilities is, so we've now deducted and we know what can actually goes to the beneficiaries. That's what this is all about. That's why it's called what? Distribution account. We are now going to attempt to distribute to the heirs. We're happy. We've made the calculations. We know where we're going, and we kind of had an idea mathematically what to do with them. The remainder of the provisions in the sub-account are self-explanatory and will be illustrated with the 8 of examples. And there they give you actually quite a few. It runs from 143, and they give you a lot of them. I'm going to do the first one, distribution account. Balance available for distribution. We've made our calculations. That recapitalization account was so important. It's given us the answer. Now look, there's 100,000 Rand. Now let's go back. Let's page back. Let's page back to page 141. There we have page 141, and you'll see the 100,000 Rand there. That is the 100,000 Rand of the total liabilities, and we've worked everything out. So what we're going to do is, in this example, we're going to look at the distributional amount. They say there's 100,000 Rand available in this specific calculation. I actually just hope this liquidation distribution account runs accordingly. Hopefully it does. Awards in terms of subject to the terms and conditions of will dated 28 February awarded as follows. Annie Brown, you get marks for this. Surviving spouse of the deceased as sole residuary heir in terms of clause 3. So it's the only heir. It's going to get everything. So we can distribute 100,000 Rand. What is she getting? She's the sole heir. She's getting 100,000 Rand. Fixed property in terms of item 1. 80,000 rand, movable 32,000 rand. That comes to 112,000 rand. What's wrong here? What's wrong here? Less cash shortfall to be paid by the surviving spouse, which is 12,000 rand, and that hits us out into the 100,000 rand. All right, guys. Then they run it into on page 104 or 44. They go on there. It's the same. There's still the same one. Or no, it's a new one. Balance brought forward for distribution awarded in terms of subject to that. It's 100,000 rand. Now there's more than one heir. They say Shane is getting 10,000. Megan is getting 10,000. Robin is getting 10,000. And Annie Brown, for some reason, is getting 70,000, consisting of what is the movables there. And if you do the calculation, now those movables are going to Annie Brown as per the will. That amounts to 70,000 rand. And there you have your 100,000 rand. And that's it. They give you more examples there. I'm not going to go through to them. You can research it. You can deal with them in your own time. Excellent. And then they give you there an example for where the award is made in terms of an Interstate Succession Act. They deal with that too. Okay, guys, we're going to move on. I still have about 50 minutes here. I need to get through this. Most probably come back tomorrow for the last time. I cannot come back. Tomorrow I'm coming back for the last time, so let's get through here. All right, now we're moving on to collation. Before we continue to see what's been said in regard to collation, first of all, what is collation? Let's just stop the bus here. Collation is what? During the deceased's lifetime, he gave Mary, Susan, and John, 3 children he has. He gave Mary 50,000 rand deposit to buy a house. Collation. Collation means, are we going to bring in or are we not going to bring in? Because under collation, if the will is silent on this, the other two kids could say to, hey, come on, Dad gave you 50,000 rand. We need to bring in the collation. Now, depending on who the heirs are and the nature of the property received during the lifetime, certain heirs may have to collate. When heirs have to collate, a property collated is not an asset in the estate, but it's added for distribution in the distribution section of the account and adjusted accordingly. The basis for collation is that parents are deemed to treat descendants equally, both in life and death. Yeah. Not all of them. Any amount given to a descendant in their parents' lifetime is deemed to be part of that child's inheritance. All right, and I'm going to stop there. You must deal with this when you draft a will. I always say to people, what have you done with the kids? Is there going to be a fight? Did you give some kid a lot of money and they did something with it? And most of the people that draft the will say, no, okay, right there, we don't want collation. We gave it to her. It's the end of the story. Now, people's going to be unhappy afterwards because siblings and these things are dangerous. They argue and they're unhappy and think things are unfair. So you must always ask people, do you want to collate or don't collate? And you must put the collation clause into your testament. Even if they say, no, we can't remember giving every money, you put the collation clause, you say they don't have to collate. Because somebody might just remember something. All right, so this is very important. So that's the collation clause. Descendants alone are liable to collate only if they are heirs, testate who have been an interstate heir if there was no will. So then that is then the circumstances there. So please deal with collation in the right manner. You know now what it is. And then very important here, there's only one thing that's really important for me here, and that you know that it's added for distribution in the distribution section. Just underline that in the first paragraph under collation. That is what is important for me. I must admit, I have a case now where I could possibly do a collation. I am having tea with a client whose wife died on Friday, and I suppose we could talk about collation because there's something you want to do there. We'll see how that turns out. But I don't really pick up collation. In my career, I've never pick up problems about this and people that wants to sue over this. I've been in boardroom where there's an argument about this, but I've never had an instruction to fight a case on this. Although I can actually think it's a familiar thing to happen on the siblings. All right, there you are. Good, excellent. That's good enough for me. And then they just show you there under the distribution account how that operates. All right, now page 146, redistribution agreements. Now you remember we spoke a little bit about it in the first clip. Let's quickly run through it and get on with this. In most estates, an informal redistribution agreement is included amongst the heirs. Dad has a watch, caravan, furniture, a motor vehicle, listed shares, and a house. The 5 children agreed to redistribute their undivided right to a first share in each asset by placing their undivided fifth share back into the estate and taking full ownership of a specific asset. Yeah, good. I mean, we can take an axe and chop up the watch, but what's the value then? We can take a chainsaw and try and cut up the car. What's the value then? So this is why this is done. So what I'm doing is the equal share situation. Sell everything or whatever the situation is. The heirs must be promoted equally, or not sell everything. The heirs must get assets equally. Stuff like that, and that's not good drafting on the will, but it happens. Now, usually I do that on the residue. On the residue, I would say, well, if there's anything over that's not a legatee, well, how do you want to deal with it? And I say, well, 3 kids equally. And some of the kids must say, but hold on, I don't want the stuff to get sold. So then you can do this. This is usually how a redistribution agreement works. A redistribution is redistribution. Your distribution comes out of the will, and the heirs, they can decide what I want to do. I don't want it, or let's reach an agreement. Redistribution agreement. Let's check it out. In the case of immovable property, a written formal redistribution must be concluded against the beneficiaries, and the distribution amount must be drawn according to reflect to whom the immovable property is to be awarded, failing which a conveyancer cannot sign the required certificate in terms of the Estates Act. And remember, he's got to transfer it, and remember, you have freedom of testation. I'm dying, I want my stuff to go down like this. Now you have to read what's happening here. Are we changing what I said I want my stuff to be done with? No. Let me read to you again. Listen to the language. The 5 children agreed to redistribute the undivided right to a fifth share in each asset by placing the undivided share back into the estate. So by implication, my wishes as the deceased has been fulfilled. They received their fifth, they accepted it. Now they are owners of it and they're putting it back and they're reaching a redistribution agreement. We're not mucking around with the will of the deceased. We're not acting illegally in terms of his will. I think a lot of people don't see it like that. You got to understand that you cannot just decide in a will, you're going to do this and that. That's it, it has to go there. And there's a legal way we have to find a way of making that happen if the heir says, but listen, I'll take that, you take this. But that's it, that must go to you. So you got to accept it, kind of put it back. And one of the best ways of doing that is with the redistribution agreement. And when I draft them, and a lot of people don't do this, they just do it. So, and everybody, even a master accepts it. But when I do a redistribution agreement, I say in the first paragraph, they have accepted the inheritance and they're placing back. And then I know that if there's a clever judge one day out there, who knows, maybe I'm the judge one day out there. Who knows? Maybe I'm lucky. And then we'll say, but did you guys do this legally? So that's how I'm looking at it. That's my opinion on this. Right, you can go through that, the redistribution agreement, that is then there. And then examples of a distribution account in terms of a redistribution agreement. It's a very good guide. You've got a very good guide. I love guides that give practical examples. And I love guides that read like this, a very good guide. And then I just show you how it's done. And you can pick it up then from there. On page 148, well, we have still quite a few minutes over here, about 40 minutes. We're going to talk about the income and expenditure account. Okay, now let's recap. Here we go. Heading. Liquidation account. Liabilities, but that all has to do with administration expenses and all of those things that go in there. Get a liabilities account. All right, now we're happy. We need to know stuff. We know the value. We have all the assets. Now we know all the liabilities. What do we have to do now? We have to calculate. Recapitalization statement. Now we calculate. All right, we've calculated. We're good to go. We're happy. Now we have to distribute. All right. Oh, don't forget the estate duty. It's also in there. You have to distribute. Okay, we're distributing, but hey guys, what about the redistribution? Yeah, let's do a redistribution. Okay, let's do that and work that back into the distribution account to show you there. Because redistribution is an agreement. It's not something in. It's an agreement people reach. And it best not be verbally. Otherwise, if you're the attorney, the agent for the executor, or you're the attorney, appoint as executor, family's got nothing to do. That happens a lot. They appoint you, they trust you after they're dead. You're the attorney, family attorney for years, then just cover yourself. That's where we are now. Starting to, yeah, I don't know, feels to me like you're starting to get it now. Starting to get it now. Starting to get it now. Let's just stay there. All right. Page 148. The income and expenditure account in terms of regulation 51F, and you can also say Foxtrot for F if you want to. This military code. Only income earned and expenses incurred after death to date must be reflected in the income and expenditure account. Income earned and expenses incurred from the date of the final account to date of payment to the beneficiary are brought to account in a final reconciliation statement. All right, so that's easy. You run up, you do everything, you have your inspection for 21 days when you completed liquidation and distribution account, but it's still a couple of days. There's things happening. It doesn't stop. You still have to give out. You can only wind up your estate when everything is gone. You're finished with it. So then they say there that the date of final account, the date of payment to the beneficiary are brought into the final reconciliation statement that you have to make there. So remember that. The balance of the income less expenditure collected after death will be distributed in the same portions as provided for in the will. That's how you need to know everything about wills. Or according to the interstate succession portions, interstate, no will. For example, if rent is earned on a fixed property which has been awarded to a legatee, the legatee will be entitled to rent on the property since he's entitled to the fruits yielded by such property. However, where the same fixed property has been awarded to a legatee subject to the usufruct of somebody else, the usufructuary will be entitled to the income earned on that property. If the property has been awarded as part of the residue, what is over, the income earned will be divided proportionately between the residuaries. Usually it's equally, but people can say, those two kids love them to bits. So many percent, naughty bugger, no. Usufructuary. When you explain usufructuary to people, in terms of their children, and I've so many people sitting in front of me, they have this appointment with me, and then they sit in front of me, and then they start arguing. Let's give the house to Joe, but Joe's on drugs. Joe drinks a lot. How are we going to give the house to them? And then I start arguing. Can't we do something else? Then you can explain usufructuary to them. A usufruct is where you give it to his kids, and he just has to use and a benefit. It's registered the deeds office. He can never sell it, and one day it's going to go to his kids. You also don't have to do it. You can give it. You can give him the usufructuary, the bear of fruit, the use of fruit. You can give it the house to a brother of his. So his brother cannot sell it, but you know, and the calculations are in here. Those calculations, if you attach value to these things. I have one case where I had to attach a value to that. That is very difficult. All right, let's go on. Example of income and expenditure account. There you have it. Income earned on investment, dividends declared to Anglo-American. There's the expenditure. That's your money. Balance awarded as follows. Annie White. And where there is an income expenditure earned and incurred subsequent to death, the fact must be stated. And then example, your income and expenditure account, they have come to null there. And then they give you, that is page 148, they give you one example there. Right, we're moving on. That is your income and expenditure account. And I want to say something here. In the exam, you will most probably get a heading. You will get the liquidation account, might get the liabilities. You will get either recapitalization or distribution. And income and expenditure you will get, and estate duty you will get. Now you'll say to me, well, that's almost everything. Not particularly. Sometimes what they do is they give you information, and then you have to calculate. What I usually do is I give you a full liquidation and distribution account, and I extract. But I've seen many exam papers where they give you minimal information. They don't want to overburden you, and they ask you a full liquidation distribution account and exam paper. Then you have to spark. But most probably they won't do that with you. We don't hope like they do it like that with you. But they can, and they're totally entitled to do it. Page 149, the fiduciary assets account, please. I spoke about this in the first clip. If it's null, it's null. Write there null and put those zeros over so we can deal with it in that manner. And just put a handkerchief there because this McDonald's thing is now frozen and the table's getting wet. For assets held subject to a fideicommission, only assets held subject to a fideicommission are reflected in a fiduciary assets account, liquidation account number 2, as its format is mutatis mutandis, the same as a liquidation account. Please remember that, provided the regulation so-and-so. Usufructuary rights only appear in the estate duty schedule, and there is no sub-account for usufructuary rights held by deceased. A bequeath is estate to B subject to the condition that B's death, the estate devolves on so-and-so. So I have explained it. I'm not going to explain it again. They give you some good examples there. A's estate, B's estate, C's estate. And they tell you the property bequeathed subject to fideicommission, property appears in B's fiduciary asset account and B's estate duty, and property appears in C's liquidation account. And that's when they pull it through to C. So go through the examples, and I think you will be fine there. On page 150, they talk a little bit more about it. The fiduciary asset account amounts to an account within an account. The liquidation account, since the fiduciary assets are reflected, they repeat what I've said there in the previous paragraph. The second paragraph there, the fiduciary assets account may only be referred to as a liquidation account number 2. Mark this. You can do that. In other words, the assets are reflected first and then the liabilities, usually being the valuation fees, cost of transfers and executors' fees, which relate to the fiduciary assets. The balance is distributed amongst the fideicommissory heirs. Any income earned on a fiduciary assets after date of death must be reflected separately in an income and expenditures sub-account, underlined sub-account, under the fiduciary assets account, and provision made for distribution to the fideicommissory heirs. What do attorneys do? What do executors do? They bypass this. You cannot bypass this. If the masters pick this off, you're going to be in trouble. People say this is too complicated, and they find a shortcut and they just bulldoze through there. You cannot do it. You have to do it as they are setting it out here. The property is registered in the fiduciary heir's name. The fiduciary heir, however, has no testamentary rights over this property and accordingly cannot appear in his liquidation account. So regulation so-and-so expressly exclude from the liquidation account property subject to fideicommission. There you go, underline that you know it. The property was bequeathed by another, A, to the deceased, subject to a condition, usually the death of B, and then it devolves upon some other person, being the fideicommissory heir C. The executor of B must transfer the property from the fiduciary heir B to the fideicommissory heir, which is C, not in terms of B's will, but in terms of A's will. The property, therefore, cannot appear in B's liquidation account, and a special account, which is the fiduciary asset account, is provided for this purpose. Don't get caught in the exam. And if you want to really work with this, this is the paragraph you study. The one I've just read now, where they actually explain precisely to you how it happens. In the past, they had pictures in here, but I actually think that explanation is very good, except if we're still going to get the pictures later on. Right, I'm moving on to page 151. They still talk about the factors needed to be noted in respect of fiduciary assets. The first is the payment of the master's fee. Although there's no absolute clarity in this regard. How about that? It is generally accepted also by the master's office that additional master's fees are only payable in the case of a fideicommission residue. So you've got to go and look at those things. And the second factor is that the executive's remuneration is also payable on the gross value of the fiduciary asset per tariff. The same tariff, 3.5%, and then, of course, that 6% we have been talking about. And thank you so much, guys. They give you examples. We go to the bottom of page 158, distribution account. Remember, they said I'd go in there. Balance brought forward for distribution, and then that statement you make there, awarded to Meganada Bondzone fideicommissory, and I'll give you a lot of good points if you tell me what is going on there. And that's how you deal with it. And then if you go to the top of page 152, if there is no assets in the estate of the deceased, the master may direct that a fideicommissory heir pay the executive's fee payable in the fiduciary assets. All right, good. I'm going to stop it there. I'm going to go on to the estate duty addendum. The estate duty addendum, it's actually not that difficult to understand. You're getting to the end of your liquidation and distribution account now. You can almost kind of start relaxing. Let's see what they do in the estate duty addendum. You're going to deal with the 20%. You're going to deal with the 3.5 rebate and all of those things. In this sub-account, we calculate the estate duty, whether the estate duty is payable, and if so, the amount of such duty. The calculations referred to in this part of the account are the calculations which have to be made in accordance with the Estate Duty Act. Since the estate duty is dealt with separately in these notes, we'll look at it later on. The calculation of the estate duty as well as the apportionment thereof will be explained below. In exam times, you usually get it. And they give you marks there for your rebate. Did you say rebate 3.5 million? And under estate duty, did you work it out? And if it's not necessary to work it out, did you write null there? Did you write null there? You get a mark for null. They want to see it. So those things are very important. And then the very end of your liquidation distribution account, there you see it on the bottom of page 152 is the executive certificate. And there's your marks, the heading and the executive certificate. Executive certificate is where the executive says, I am not guilty of any wrongdoing. I have finalized, I am happy, master can trust me, and personal liability. This is a final sub-account of Regulation 5 and consists of a statement by the executor that the account is a true and proper account of the administration of the estate, as well as a statement to the effect that all the income after death to the date of the account has been accounted for. And they give you an example. I want to go through the example, and it's something I want to say before I move on. I, the undersigned, that's you, the executor, not an agent. Not an agent. If you have an agent, you're an attorney, you got to send it. The executor's got to sign off on this. The duly appointed executor in the estate of the late so-and-so, estate number, declare as follows. The foregoing pages contain a true and proper account of the liquidation and distribution of the estate, and, to the best of my knowledge, your personal knowledge, even if you're an attorney or an executor, remember, if you're an attorney appointed executor, it's not an attorney's executor, it's you, Joe Smo. To the best of my knowledge and belief, all the assets and income collected subsequent to the date of death of the deceased to the date of this account has been disclosed in here. All right. Before we go on, we're now finished with the liquidation distribution account. And I want you to practice this. Online teaching, I know it's difficult, but you ought to have an idea now. Just by listening to my voice, it instills confidence, except why I lost you with the recapitalization and the distribution, but I'm sure we pulled it back to a certain extent. You are a distance learner. You're going to work this. You're going to work this. And I have an example. I think I have an example. I don't know if it's in here that I made available to them. Just go and look at the end of this. We'll have a look at it before we end. We'll see how far we get in my free sessions. And then you can actually exercise it. It was actually an exam, and I had guys write in the venues. And they sat for 4 hours before they finished something like that. I want to say something about the liquidation distribution account and exam. Guys, please, you waste so much time. Read your questions. In the last exam, I was surprised. They gave the scenario. And I said, right, here's the scenario, this is happening. Please do the liquidation account, the recapitalization account, the distribution account. And I think they also said the estate duty here at the end. And then people went and they sat down in an exam, which is only limited time, and you're under pressure, and you freaked out. And they did everything. They did a heading, they ended with the certificate. And a lot of those guys failed. Because I think if you are freaked out and you see you're running out of time, you're wondering why, it's because you didn't read your question. So only certain divisions were asked. Please make a summary of the divisions. No, precisely, like I've tried to explain it to you, the heading, the liquidation account, the liabilities, then we have those things in there, we have the estate duty there, a little bit of it about there, then we run into the recapitalization, down into the distribution, fiduciary assets, and we come out on this side, and we run into redistribution if that is necessary, we run into estate duty into the certificate. Hey, hello, there you have it. So know this, know what is what, so that you don't put stuff in there you don't need. You only have so much time to write an exam. And I have seen people, when they do that, they actually lose it, they lose their nerve, and they fail the paper. Very well, that's the one thing I wanted to say about that, because that is very important. And I'm going to have a sip of this apple juice Coke. Damn, that is sweet. That is way too sweet. All right, let's go on. Page 153, you would remember in the beginning when I started talking to you about administration of the deceased estate, one of the things I spoke about was the query sheet issued by the master. So you've submitted everything and he isn't happy. Then you'll get a query sheet. Please don't freak out. It's normal. Everybody gets a query sheet. If somebody is doing it under your control, don't get too rough on them. It's an opportunity to fix stuff. Hopefully you were not negligent, but it's an opportunity to fix stuff. The liquidation distribution account must be lodged with the master of the High Court. The master examines the account and issues a memorandum known as a query sheet in which he requires to finalize the estate as set out. The query sheet is issued on a form J242 and consists of 3 separate parts. The memorandum consists of the master's primarily queries, his requirements before distribution, and his requirements to bring the administration to an end. Easy. All right. So if there's going to be queries, then obviously the others are not going to be applicable. The requirements before the estate account is advertised. The liquidation distribution account must be drawn substantially in compliance with Regulation 5. If the master is satisfied that non-compliance is not material, he may waive compliance therewith. The master checks compliance with the regulation may require the executor to lodge vouchers to substantiate any items appearing in the account and provide information or explanation in respect of the account. Years ago, most probably had to be checks, not anymore. It will be something else, EFT confirmations. So they could ask you, bring us checks in, bring this and bring that in. The master requires proof of Section 29 advertisement, bank statements, divorce orders, and prenuptial contracts and formal variations if such duty is payable or if they are minor beneficiaries. So that is what happens then in terms of that. Since the account may be queried by the master and may consequently have to be changed by the executor, the account should not be advertised as lying open for inspection before the master's preliminary queries have been attended to. That's it. I'm not going to deal with it further. I'm happy to leave it there. Read further through it, the risk of documents and all of those things. Now, number 3, the requirements before the distribution. What is the distribution? Oh yeah, now we know. It's after recapitalization. We're happy. We worked everything out. We had the assets, we had the liabilities, we did our mathematics. We know what has to be distributed. We must now just determine in which manner it must be distributed. So, yeah, mathematics was done in the recapitalization account. After that, we're going to distribute and we're going to tell how we distribute and why we are distributing. So now we know. We've gone through this training. We know. We've got an idea what's going on here. Now, requirement before the distribution. Before the estate can be distributed, you've got your 21 objection inspection period where people can look at this liquidation distribution account and raise objections. I mean, I'm sitting with 2 cases that came in this morning that I have to give legal opinions on. Where the account is advertised to live inspection and the copy is also advertised to live inspection at the magistrate's court, so it's important. Having jurisdiction where the deceased was resident at the date of his death, the master will require the return of the account from the magistrate duly endorsed, in terms of which the magistrate confirms the period that account is laid for inspection and advises whether or not an objection has been lodged, the magistrate. As soon as these requirements have been attended to in a condition that no objection is lodged, the executor will be in a position to distribute. End of the story. End of the story. But you're getting checked at the court. It's not just you put it against the notice board as the end of it. There's things that has to be done, and you have to provide the master with this certificate from the magistrate's court to say that indeed it has been done, and indeed there was no objections. Then the third thing in that document, that query sheet, the third division of it, requirements after the estate account is laid open for inspection free from objections. After the account is laid open for inspection free from objection and that certificate has been handed in, noting the requirements before distribution, the executor must distribute the estate in terms of section so and so. On proof of compliance with the above and items referred to in section C of the master's query sheet, the master will issue a discharge or filing notice, which serves as proof that the estate has been finalized. This can take years, 10 years, 15 years, 6 months, it depends. And this is what this is all about. All right, so take a deep breath. We've made it this far. We've made it this far. We will answer your questions as thoroughly as we possibly can. You must first do the research, and if you have found an answer, don't ask a question, because when we come back to answer questions, let us just ask the questions for which you don't find answers. Otherwise, it's a waste of time and resources. We cannot do that. So we can only answer your questions as true questions and things you are confused about. All right. So now that we basically finished with this liquidation distribution account, sat back, go and do research, do a couple of examples, get some questions going, and send them to us. Advertising the account as laying for inspection. They're going to now, okay, that was 154. Let me just get a new paper in front of me. 155, they're still talking there about advertising the account as laying for inspection in terms of section 35. You can go through that in your own time. Maybe just at the bottom of section 1, page 155 at the bottom. If the master rejects an objection, and the objecting party does not take the master's decision on review, des finite. He has now arrived, and the executor must proceed to distribute the estate. Please be mindful of section 35, which requires the executor to pay all monies which he has for any reason been unable to distribute within 2 months of the estate becoming distributable to the guardian's fund. All right. Look at that paragraph. Make certain you understand it, and then also understand. Be cautious to pay money into the guardian's fund. Make certain that there's no way you can get it to where it needs to go, because out of experience, to get money out of the guardian's fund, that's a trip and an extra one. So that's kind of difficult. So make certain that you pay as much as you can, and you do your research and investigation to get the money where it's going, because otherwise there's going to have to be all other applications and stuff happening. Finalization of the administration. After the LQD account is laid for inspection free of objection, is page 156. The executor must distribute the estate. We've said that. The executor shall now transfer the immovable properties into the names of the heirs and legatees, and this is the distribution. All of this will then be done. The executor must submit proof to the master of payment to the heirs and creditors, which may be in the following form. Please mark this, very important, because this is how you cover your ass. Received or acquaintance from the creditor or the heir. The original negotiated check payable to the creditor or the heir. Pull a line through that. Why, are you asking? Why, if I see the word check, would I say pull a line through it? Because you know why. I said it in the first clip. An affidavit by the executor confirming that a creditor has been paid and the heirs has received the shares of the estate in accordance with the liquidation distribution account. And you can also then consult section 3512 on this. Please pull a line through. Let me just pull a line through here so that I can also just deal with that on another level where I'm sitting, because your bookkeeping books you are getting, don't get all hysterical. They still talk about checks. They don't get hysterical. We know about it and we are fixing it. When they talk about checks, no. It's a no. You know why. The master's final requirements. We're looking at that now. After the estate is distributed, the master's final requirements must be replied to. This includes submitting the master's proof of payment of master's fees and estate duty, proof of the transfer of the fixed property and cancellation of the bond, proof that heirs and creditors have been paid, and the bank statements and paychecks, including the final bank statements reflecting a null balance. Circle that. It must be a null balance. One requirement which does not appear on the master's print and query sheet, but which he does include is confirmation that the estate has been divested of all shares. For the list of the master's final requirements, you can go where they are chasing you in that direction. And then on page 157, discharge. So we are repeating ourselves a little bit here, but it's not a bad thing. After the executor has finalized the administration and replied to all the master's outstanding requirements, the executor may apply for a master his formal discharge in terms of section 35. And that's where I'm going to stop that. You can go through that. The next division we are going to, we've got 17 minutes to make some inroads into it, is the omnius estate duty. Although I don't think it's such a big issue. So we're on page 158 now. Let's start dealing with estate duty. There's your learning outcomes. You can go through that. On page 155, they've got an introductory remarks. I'm not too much interested in that. They talk about section 2.1, and then they talk about the general formula. Now, we're going to start there, obviously. The formula for calculation of the estate duty is determine what is property of the deceased at the date of death. Well, we already said it, right? Determine the value. We already said it. Determine the net value. Well, there we're going to have to be careful of it, because determine the value of property and deemed property, and they've got specific definitions we'll have to look at tomorrow, I presume. Determine the net value of the estate by deducting from the total value of property and deemed property the deductions as allowed in 4A and Q of the Estate Duty Act. So we're going to have to do some calculations here. So although we did mention it, now we're going down to serious calculations. Determine the dutiable amount, and there for the first time we're talking about a 3.5 million rebate, and we will have to be looking at that. Page 160, there you have it. Property as defined in section 3.2 and deemed property as defined in section 3.3. And we'll see later on precisely what the definitions is and why they differ. It's actually very easy. And they make up the gross value. It runs out into your section 4 deductions. You will see also in your calculations I've shown you. They show you precisely your deductions in section 4. When these certain deductions has to be done. And I know for Q, the end of estate duty, then these deductions are done so that your percentage of your estate duty, dutiable, payable taxes, estate duty is correct. Net value of estates, that's them important. Then you less your rebate of 3.5 million rand. If it's under 3.5 million rand, do we pay taxes? No, we don't. But if we have 3.6 million, then obviously we're going to pay taxes on 100,000 because we're 100,000 over 3.5 million. That's the rebate you get. And then you work your dutiable amount out, and I've been saying right through the links, it is 20%. Still easy. So actually what's happening now is we're looking at the mathematics, but we've already touched on this, which makes it familiar to your mind. You hear it again, you're looking at a paper, I'm talking to you, and you're already familiar with the legal jargon in terms of these things. Page 161. Estate duty is payable at the following rates on the dutiable amount of the estate where the net value exceeds the section 4A primary rebate as follows. And then I give you the dates there. And please just remember up to the amount of 3.5 million. Surviving spouses are entitled to twice the abatement, 7 million. We didn't say that, did we? Make a circle there. It's a good thing. We're looking at this. Your normal 3.5, but the surviving spouses up to 7 million rand. That's great, eh? That's actually good. It says a lot about a country. Yeah, it says a lot about it. The rate of estate duty prior to that, it's not important. As long as you know it's 20%, circle it. Don't get confused, eh? Don't get confused. Your situation is 20%. All right. What is gross value? Well, we actually already know, don't we? One must determine the gross value of the estate. The gross value represents the estate of the deceased for estate duty purposes and will include all property of the deceased, whether local or overseas. Underline that, because later in the guide, and I also in this one case that came in from this morning, they're asking about assets which is owned abroad, and I've got to do a legal opinion for them on that. And the answer already is yes, you have to take it into consideration. As a date of death, as well as a property deemed to be property of the deceased as date of death. So have a look at that. That is very important. Bear in mind when calculating estate duty, you are determining the dutiable amount of an estate, which is a revenue law, while the liquidation distribution account, you are attending to the logical and orderly distribution of the estate of the deceased. Actually, what I'm saying there is don't muck around with SARS. You're going to get into trouble. All right, property defined in section 3. And the valuations thereof will be dealt with in the examples below. Brief analysis of section 3. According to section 2.1, estate duty must be leveled in the estate of a person. Say it again. What then does an estate consist of? Section 3 of the Estate Duty Act tells us the following. Section 3.1. In terms of the subsection, the estate consists of all property of a deceased at date of death, and all property deemed to be property of the deceased at date of death. And don't worry, I know what you are screaming, but sir, what is deemed property? We're going to tell you. It's not a problem. Just concentrate for now on property. We're going to tell you what's deemed property. It's not difficult. However, one still does not know what is property and property deemed to be property. See, I'm a mind reader. Section 3.2, this subsection defines property as well as what is not property, and section 3.3, the subsection defines property deemed to be property of the deceased estate duty purposes. Now, property then. Property as defined in the Estate Duty Act. Section 3.2 defines property to mean any right. All right, listen up. We're going to tell you what this means now. Any right in and to property, movable or immovable, corporeal or incorporeal, we're thinking shares and stuff. The assets reflected in the liquidation account and includes, do you remember the second liquidation account? Do you remember? The Fiduciary A, B, C, we went through with the usufruct and fruits. a fiduciary usufructuary, so you already know what this is about, we've spoken about it, or other like interest in property, including the right to an annuity charged upon a property held by the deceased immediately prior to his death, and any right to annuity other than a right to an annuity charged upon a property enjoyed by the deceased immediately prior to his death, which accrued to some other person on the death of the deceased. So make the distinction there, and you are in good conversation. The definition of what the property, of what is property in the Estate Duty Act includes movable, even movable, corporeal or incorporeal. This includes the assets already reflected in the liquidation account. For estate duty purposes, there are two types of assets. The values of which appear in the liquidation account, which may be adjusted in the estate duty schedule, namely the property on which a bona fide farming. Do you remember what's the percentage? 30%. 30%. Do you remember that? Farming undertaking has been carried on in the Republic, farm property, and shares in the company not quoted on the stock exchange. Remember, you have to differentiate under your divestment notes if this is stock exchange shares or privately owned shares in the company. Do you remember that? So that's that. Okay, fine. That's page 162. And the general rules as regards to value, you can look at that in your own time. They also give you the formula there. And that formula is usually due on the FMV formula, FM Foxtrot Mike Victor formula. And we will be looking at that also later on in this guide. And if we don't get time, obviously we're going to have to research it, or alternatively, if you don't understand it, ask questions. Property sold in the course of the administration, section 5.1 provides that where property has been disposed of by a purchase and sale. In other words, the property has been sold out of the estate, and the commissioner is satisfied as a bona fide purchase and sale in the course of the liquidation of the estate, then the gross proceeds of such sales represent the value. Not going to talk about it. Why am I not going to talk about it? I said it a million times. I explained to you, either you sell it in the estate, what amount goes in, or it's transferred later out, and then it's a valuation. So we are actually now repeating ourselves a lot here, but we have to, because we're going to get to the calculations, and I don't want to just skip here. I just want to go through this with you. All right. So I'm not going to do that over. That's page 163. On page 164, they talk about valuation section. Page 164. The price realized in terms of so-and-so is the value that takes precedence in the liquidation account. If the property is sold in the course of a liquidation, the gross realized value always appears in the liquidation account that takes precedence over the fair market value determined. So take that into consideration. That is important. Then we're going to move on to page 165. We spoke about a farming property, 165. Let's do that again. And there, at first sight, you can see the 30%. Immovable property on which a bona fide farming undertaking is carried on the public held by the deceased at his date of death, which is not sold in the course of liquidation, must be reflected for estate duty purposes at a fair market value. However, fair market value as far as immovable property on which a bona fide farming undertaking is carried on in the Republic is determined by reducing the fair market value by 30% for calculating estate duty. And you have to show these calculations in your liquidation distribution account, even if it's under the divestment. That is why I say you must have 3 columns. You got 1, 2 columns, you can work there, but you work this out, you do it in your 3rd column, and then we can see it. Fair market value is defined as the price which could be obtained upon a sale of the property between a willing buyer and a willing seller dealing at arm's length in an open market. All right, I'm happy with that. I'm going to page over to page 166, and there they show you examples for valuation of a property, and you can look at that. And then the solution is under it, and they show you precisely how to do it in a very, very good manner. I like the way they're doing that. Right, I still have 7 minutes left. I'm not going to stop. Page 167, 67. There goes my voice. Property not sold. Property awarded in specie. If the property of the deceased is not sold, and the value shall be the fair market value at date of death, then you have to consult section 5.1G and read with section 1. The fair market value of a property is defined in section 1. The price which could be obtained upon a sale of the property between a willing buyer and a willing seller dealing at arm's length in an open market. In order to assist the executor in guesstimating this value, I always like that word, guesstimating. You're guessing. So they say guesstimating the value. Section 6 of the SA provides for the apportionment of an appraiser Alternatively, the property may be valued by a specialist who has knowledge of the asset, jewelry, and I'm not even going to read further because we spoke about that. Then we're going on to limited interest on page 167. Introduction, section 4 property, which means a right in or to property. Movable again, corporal, includes a fiduciary, usufructuary, or other like interest in property, including a right to an annuity charged upon property held by the deceased immediately prior to his death. And that is page 167. And it also goes on to say any right to the annuity, we have dealt with it. I just want to read the following paragraph. Here we are still dealing with property of the deceased as defined in section 3.2. Subsection so-and-so includes as property any limited interest held by the deceased to be included as an asset, property in his estate. One must distinguish between deceased who creates the limited interest and a person who enjoyed the limited interest. When administering the estate of the person who created the limited interest, the property is and remains normal property in his estate. We're starting to think about what? Property deemed to be property. We're going to get to it. We're starting to merge into that now. The limited interest becomes operative only after his death. The property accordingly appears in the liquidation account, and as is the case with any other property, subject to the description recording the interest, and as normal property is dutiable. In your divestment notes, make a note there, right there. In your divestment notes, you've got to say what's going on there. I just want to read all of it. This can be difficult. When administering the estate of the person who enjoyed a limited interest, such limited interest by definition in the Act, property of that deceased person, this limited interest must be valued, which is calculated in the estate duty schedule. The limited interest is not property in the normal sense of the property, and accordingly does not appear in the liquidation account. Now you better start making notes. The limited interest which now passes to someone else is dutiable in terms of the Estate Duty Act. How this value is determined and to what extent it is dutiable will be dealt with below. All right, so we'll see further on what's going to happen there. On page 168, there is how you calculate your factors under the usufructuary interest. Appears only in usufructuary as Estate Duty Schedule. There's Papa Foxtrot Mike Victor multiplied by 12%, multiplied by the factor, and this is not, circle not, in the liquidation account. That is your usufructuary interest, and then they start off there with an introduction, which I'm going to skip. I'm going to move immediately to usufructuary. This is a limited right. We just spoke about it. This is a limited right. Our limited real rights in the form of personal servitudes. They are usually inalienable, uninheritable, and short in duration until people die. So you can look at that. There they say, and remember, I just want you to take note of the terminology bare dominion heir. In a usufructuary, the life right to stay on the farm and be the bearer of the fruits on the farm until mother dies. This is now father's deceased estate. She is the usufructuary heir. But the house must go to the son Max. Max is the bare dominion heir. He's the one that you can register the property into his name, but there's a servitude, there's a registration at the deeds office that says that he cannot alienate, he cannot get rid of it until mother has died. Or something else maybe has happened. Like she has a stroke, or she says, I'm finished, I'm getting out of here. She signs the necessary documents, she goes to her old age home. There is things you can do in an agreement, but you need to be cautious with these things in terms of fraud and so on. Like I said previously, with some of these things, I'm not very comfortable. As can be seen from the above example, they use Allen there, but I used my example, so I'm not going to go further into that. At the bottom of page 169, on the death of the usufructuary heir, the right to the use and enjoyment of that usufructuary ceases. I'm not going to talk about that. I just told you about that. So I dealt with that. Maybe on page 170, for estate duty purposes, we are concerned as regards usufructs only with the position of the usufructuary on his death. To summarize, it can be said that in the estate of a usufructuary, the property over which the right of enjoyment was held will not be accounted for in the usufructuary's liquidation account, but the right of enjoyment which now passes to some other person, which is your bare dominion, the substitute of usufructuary, oh yeah, that can also exist, can be a second life right handed out, must be brought into account at the value in terms of section so-and-so of the Estate Duty Act. So yeah, SARS misses nothing, absolutely nothing. And the evaluation of the usufruct for estate duty purposes, I quickly want to get to that. It has been stated above that usufruct is a right of enjoyment over property and that ownership does not vest in usufructuary. We know that now. As I've been talking, you must have picked that up. How then does one calculate the value of this right of enjoyment, which now accrues to some other person? Section so-and-so deals with the valuation of usufructs. You refer to the relevant provision in Estate Duty Act, which appears at the end of these notes. And then I talk a little about there about consideration of terminology, but I am going to stop right here. This was the second day I was here and have spoken to you. I don't know if they're going to merge these presentations. For you, it would be one, but we'll be back tomorrow. For you, it will be a couple of seconds. If you have all of these presentations at hand. And there you are. There you are. A lot of information, and I know it's difficult. Don't make a mistake. I know sitting here saying this to you from my level is like, okay, I've been doing this. And for you, it's like, what the heck? Do not worry. If you listen to the advice that's been given, you do your research, you use a lot of examples, and you ask realistic questions where it's necessary, we're going to assist you further. And just make certain that you also reach out to each other, and maybe you've got friends in the industry that can also help you. Distant learners has an obligation to familiarize themselves with the information. So you got to do that. And please, if you really have no alternative, we need those questions so that we can assist you. I'm going to be back then later, tomorrow for me, for you a couple of seconds to do the third link. And you enjoy your day, or wherever you are, wherever you get us. We're good to go. I just need to put this off now, I suppose. I just have to go there. All right, guys, I'm out of here. And my next link most probably will be my final one. Good luck, and we'll finish this off in the third link.